So, when you're thinking about investing in stocks, it's really easy to get kind of lost in the numbers, right? The financial statements, the reports. But what if understanding how a company actually makes its money, its core business model, is just as critical, maybe even more so, especially if you're looking, long term.
Oh, absolutely. It's like looking at the financial statements gives you the score of the game so far. You see if they've been winning, if they've been profitable. But to figure out if they can keep winning, keep being profitable, you really need to understand their strategy, their business model. That's the engine driving those results.
Exactly. And that's precisely what we're digging into today. We've got some really interesting material here that kind of highlights why looking at both things, the financial health and that underlying business plan, is like the essential combo for smart stock investing.
Yeah, our mission today is pretty straightforward. We want to give you, the listener, a clear sense of why analyzing both sides, the model and the statements, is so vital for making informed decisions, particularly, like you said, for those thinking longer term. It's about seeing beyond just the latest figures, understanding the bigger picture, how a company actually operates and, importantly, sustains itself.
Okay, so let's get into it. We're saying it's not just about glancing at the income statement or the balance sheet. That's not enough. We need to grasp the fundamental way the company creates value. It's kind of like trying to judge a hit restaurant just by looking at its daily takings. You also need to know about the food, the service, where they get their ingredients right.
That's a really good way to put it. Financial statements. They give you that quantitative view. Revenue, expenses, assets, liabilities, all that stuff. You've got the income statement showing profitability, the balance sheet for financial position, the cash flow statement telling you about liquidity. These are essential numbers, no doubt. They give you data, ratios, let you evaluate their current standing.
But what don't they tell us? Where did just the numbers fall short?
Well, the big thing is that financial statements mostly look backward. They report on what already happened, past performance. And while trends are useful, sure, they're definitely not a crystal ball, especially in industries changing super fast. A company could have amazing historical financials, but if its core business model isn't adapting, it could easily stumble.
Right. So making money yesterday doesn't guarantee they'll make money tomorrow if the way they make it is like becoming obsolete.
Precisely. And financials often miss really key qualitative things, stuff that drives long-term value but is harder to stick a number on. Think about a company's knack for innovation or the actual power of its brand. How loyal are its customers, really? How good is the management? What's the company culture like?
Yeah, you can't easily quantify a breakthrough idea that's still being developed or that intense loyalty some brands command.
Exactly. And another point, we should remember that accounting rules aren't always black and white. Practices can vary. There's some subjectivity involved. So even those seemingly objective numbers might not paint the, let's say, the full unvarnished truth sometimes.
Okay, got it. So financials give us the score so far, but the business model tells us about the team's strategy and whether that strategy is built to last. So what exactly is a business model then, in simple terms?
Well, in essence, a business model is just the company's plan for making money. Simple as that. It covers what they sell, products or services, who they sell it to, their target customers, how they reach them, and critically, how they manage costs to actually turn a profit.
Yeah.
It's the blueprint, the logic behind how they operate and create value day in and day out.
A blueprint for profit. Makes sense. So what are the key parts of this blueprint that we as potential investors should really be zoning in on?
Okay, there are several crucial components. First up is the value proposition. What unique benefit does the company offer? Why should customers choose them? What problem are they solving, or what need are they meeting better than anyone else?
Right, the why them question.
Okay.
Okay, what's next on the list?
Next, you've got the target market. Who exactly are they trying to sell to? Which specific customer groups? Understanding this helps you figure out if they're aiming at a big enough pond and if their product actually fits that audience.
Knowing your audience, yeah, that's fundamental fit.
Then you look at revenue streams. How does the money actually come in? Is it selling things directly, subscriptions, ads, licensing fees? And what's really interesting here is the type of revenue. For long-term health, recurring revenue like monthly subscriptions is often seen as gold compared to just one-off sales.
Why is that? More predictable.
Exactly. It creates a much more stable, predictable income base. You're not constantly chasing brand new sales every single month just to tread water.
Okay, building that reliable customer base. Got it. What else is key?
The cost structure. What are the big expenses involved in running the business? And how well are they managing those costs? You need to understand this to gauge potential profitability. A leaky bucket won't hold water no matter how much you pour in.
Makes sense. You need to know where the money's going out, not just coming in. What about the actual doing part?
That falls under key activities. These are the absolute must-do things for the company to deliver on its promise and make the whole model work. Could be R&D, could be marketing, could be super efficient manufacturing, whatever is core to their success.
The stuff they absolutely have to nail.
Yeah.
What do they need to do those things?
That leads us to key resources. These are the essential assets they rely on. Things like their technology, maybe patents, their brand reputation, distribution networks, key talent, intellectual property. These are the tools they use to deliver the value.
The core building blocks. Okay, and the last piece you mentioned.
Finally, and this is a big one, competitive advantage. What lets this company do better than its rivals? Is it unique tech? A super strong brand people love? Are they way cheaper? Do they benefit from network effects where more users make the service better for everyone? Having a sustainable competitive advantage, something hard to copy, is absolutely vital for long-term profit and staying ahead.
Right, so that's the moat you hear investors talk about. Okay, so we've broken down the business model. Why is understanding all this stuff, digging into these details, so critical for us stock investors? We have the financials. Why do we need this more qualitative view?
Because the business model gives you insights into revenue generation and sustainability that you just can't get from the P&L statement alone. It explains how they plan to make money consistently. How stable are those income streams? Are they diversified? Or are they maybe dangerously reliant on one big customer or one hit product? Understanding their pricing power fits in here too. A really solid model points towards long-term viability.
Yeah, knowing their income is reliable and comes from different places gives you way more confidence than just seeing, say, one great quarter of sales figures.
Exactly. Then there's evaluating their competitive advantage and market position. The business model spells out what makes them different, what their edge is. Do they compete on cost, on having a better product, unlocking customers into an ecosystem? Understanding these strengths helps you judge if they can keep competitors at bay and protect their profits over time.
Understanding their defenses, basically. Yeah, that seems crucial for the long haul. What about looking forward? Growth.
Oh yeah, the business model is key for assessing growth potential and scalability. It tells you about the size of their target market, how they plan to get more customers, maybe enter new markets, and crucially, can their model scale? Meaning, can they grow revenue much faster than costs? That's super attractive for investors because it means profits can really take off.
Right, like software companies adding users without much extra cost per user. Big potential there.
Precisely. And looking closely at the model also helps you identify potential risks and vulnerabilities. Maybe they depend too much on one supplier or one distribution channel. Or maybe their whole model is vulnerable to a technology shift or changing consumer tastes. These are risks that might not jump out from the balance sheet until it's too late.
Things that could really bite you if you're only looking at the past performance numbers.
And one more thing, the business model gives you a real window into management's strategic thinking and their ability to actually execute that strategy. A clear, logical business model suggests the leadership team understands their market and has a coherent plan. That builds confidence.
Okay, I'm sold. The business model clearly matters a lot. So when we're actually doing our homework on a company, what are some key questions we should be asking about their model? What should we look for?
Well, definitely start by digging into their value proposition. Is it really clear? Is it unique? Is it something customers actually want and are willing to pay for? Does it solve a real problem? A weak value prop means the foundation is shaky.
If customers don't see the value, nothing else matters much. Okay, what else?
Next, really scrutinize their revenue model. How many streams do they have? How stable are they? Is there a good chunk of recurring revenue in there? How vulnerable are they if the economy takes a downturn or customers start leaving?
Looking for that reliable, diversified income.
Got it.
After revenue.
Then you need to critically assess their competitive advantages. What are they specifically? How strong are they? And most importantly, how long can they last? Can competitors copy them easily? Or are they durable?
What's protecting their turf? And for how long? Makes total sense. And their plans for the future.
That's where market analysis and their growth strategy come in. Do they really understand the market they're in, its size, its growth prospects? What are their concrete plans for growing, expanding into new areas, reaching new customers? You want to see a clear path forward.
Where's the future growth coming from?
Okay. And also, you need to consider their adaptability and innovation. How good are they at changing with the times, responding to new tech, shifting customer preferences? In today's world, a company that can't adapt is probably not a great long-term bet.
Got to keep evolving or you get left behind. And the last check.
Finally, take a hard look at the management team. Do they have the right experience, a good track record? Do they seem capable of actually executing this business model effectively? A brilliant strategy on paper can still fail if the execution is poor.
So it's the plan and the players. We mentioned some examples earlier that really drive this home, don't they?
Oh, absolutely. Think about Netflix. Their subscription model was revolutionary at the time. Combine that with compelling content, great tech that drove huge success, and crucially, their ability to pivot from DVDs to streaming. That's classic business model adaptation.
Yeah, they saw where things were going and made a massive, successful leap. What's another good example?
Well, Apple. You have that integrated ecosystem, hardware, software services all working together, plus that incredibly powerful brand loyalty. That's a very strong, very profitable model. And they keep finding ways to expand, adding new services, new products.
Right, once you're in their ecosystem, it's hard to leave. What about the flip side? Companies that stumble because of their model.
Well, the classic example is Blockbuster. They were king of the hill, right? But their whole model was based on physical stores and late fees, essentially. When streaming came along, offering convenience, their model just couldn't compete. They didn't adapt.
Stuck to the old way and got steamrolled. Any others?
Kodak is another famous one. They actually invented digital photography, believe it or not, but they were so tied to their profitable film business, their core model, that they just couldn't fully embrace the digital shift early enough. Their model became obsolete.
Wow. So being too attached to your current success, your current model, can actually be fatal. These examples really hammer home how vital that underlying business structure is, especially for surviving long term.
And it just underscores the point. Financial statements show you where a company has been. Understanding the business model helps you figure out where it might be going. That's particularly crucial for you, the long-term investor. It gives you those qualitative insights into sustainability, growth potential. Many of the great investors always stress looking beyond just the numbers. It's about understanding the business itself.
So, okay, let's wrap this up. What's the core message, the key takeaway we want everyone listening to remember from this deep dive?
The main thing is this. For a really comprehensive view, especially if you're investing for the long haul, you absolutely need to look at both the financial statements and the business model. They work together. Financials tell you the past and present score, but the business model, that explains the how and the why. It gives you critical clues about how the company operates, its competitive strengths, its sustainability, and its future prospects. Those qualitative factors are what really drive long-term value.
So it's about getting that complete picture. Understanding the engine, not just looking at the speedometer reading.
Exactly. So we really encourage you, take that extra step. Think about the fundamental business models of the companies you're interested in. How do they actually make money? What keeps them ahead? Understanding that is just essential for making smarter, hopefully more successful long-term investment choices.
Right. And on that note, here's maybe a final thought for you to chew on. Think about the companies whose stuff you use every single day, your phone, your streaming service, where you shop. Have you ever really stopped to analyze how they make their money? What does their business model tell you about their chances of still being around and thriving 10 or 20 years from now? Definitely some food for thought there.